like first of all we have a time constraint. First of all, okay. And second thing, like we have finished like complete financial management in finance. The same thing with accounting management. We are going to finish accounting management in finance. So we are concentrating focus only on theoretical part. Because again teaching mathematical problem online, I think that will be a very difficult. Okay. If you have any
Okay,
particular
sir.
problem, like Dhanush, if you have any particular problem, take my number from management, and like you can ask me, like try to solve your own. If you have any problem that you are not getting at a particular point, you can ask me anything. Right? But
Okay, sir.
online
Right
solving
now,
a
I'm
problem.
trying my best to solve those problems.
Mhm.
Sir, in this semester, will be there some mathematical problems.
I don't set papers, so I don't. Okay, but most of like it's MCQ based question, so there is a little scope for problems. Maybe they will ask you some of the terms like what is trading account and what are the headings of trading account, which we can anyhow cover in theoretical part one, and we have already discussed about this. We are
Okay,
touching
sir.
every point of the syllabus except sums, except problems.
Okay, sir.
Mhm. Okay. Any other suggestion? Any other opinion? Especially from those students who are not from a commerce background, because I'm sure those who are from a commerce background, they already have little bit understanding of the subject and they will be able to manage. Right? They don't know anything. I don't have I don't have to worry about those who are from commerce background. But those who are not from a commerce background, engineering background, any other background,
I
maybe
don't
they
have
are
any
facing.
problem. Your study material is very good. I don't have any problem. It is well
Thanks, sir.
written and everything is well understandable.
Thank you, sir. Thank you. Okay. So, see, guys, whatever resources we have, like we are trying to use it in the best possible way. Like the most important constraint we have is the time management. We have only 1 hour lecture. Normally I have a habit of taking 2 to 3 hours lecture, but still it is 1 hour lecture. Time constraint within a few lectures we have to complete the syllabus. Like our semester itself has started comparatively a bit late. So, like looking at your exam timing and everything, whatever time we are trying to cover it best. And the only thing which is expected from you is like the moment we complete a particular unit, you should read that unit on that particular day itself, so that you will have a lot of examples, case studies. Even if you don't understand, you can ask me in the next class. But if you are like piling up like everything, if you want to complete on the last day, maybe that time you will face little difficulty. Otherwise, like whatever concepts we are discussing, we are trying to relate those concepts with your daily life, or we go for very practical kind of education. We don't go for any theoretical kind of education. We are just discussing slides or concepts. We take few slides, but we take more of the case studies and examples. Right? Can we move for our today's session?
Sure, sir.
Just one humble question, sir.
Yeah. Please,
Uh,
sir.
what will be the tentative date of examination? Because I am myself the head of one PG Department of Commerce and Management.
Okay.
So I'll have to run this online examination. Total examination is under my control. There are 47 colleges under my university. The
Okay, sir.
total in charge will be mine. So I'm
Okay.
asking what will be the tentative date so that I have to physically move for the examination as a candidate as well as I have to run the examination of my university. So that's
Sir,
why I'm
as
asking what is the tentative date.
sir, as far as I know, like we have another 10 to 12 sessions for
Okay.
our academics. So around like considering that maybe we have like, exams in August, first week of August. But again, we have to confirm with the management. This is just a tentative which I come to know. That is August, first week of August we have the exams.
Okay. Thank you.
Okay. Okay. So just to start our machine or brief, just to understand like how much you have understood from financial accounting or accounting management. What is leverage or any leverage, operating leverage or financial leverage? Can anybody tell you what is leverage?
Actually, what I feel that leverage is uh, kind of lever. That means some it can also be called gearing, use of the borrowed capital in order to get advantage over the own capital, to use much more borrowed capital in order to get advantage of the owned capital. This is the ratio between owned capital and borrowed capital, and much usage of borrowed capital so that the owned capital can have more advantage in terms of dividend or profit. So this is the leverage.
Leverage provides you support. Okay, which provides you support. Maybe you don't have support at a particular time, but you arrange support and you use that, to get a maximum benefit about like among whatever you have. So can any other example for operating leverage, like sir has told about the financial leverage, equity and your own capital. So any example for operating leverage, fixed cost, variable cost, like we have discussed. If you increase your sell by 10 to 20%, maybe your profit ultimately may increase by 50 to 60%. Can anybody try? We have taken example. If you remember, like there is somebody who is having a salary of 50,000. So this is not for you. This is not to check your knowledge, but this is just to understand like whatever I am teaching, how much I am able to convey you. Any example of operating leverage?
Formula is contribution by EBIT, but actually at present I am not getting an example.
Anything about the difference between journal, ledger, trial balance, subsidiary books, balance sheet? Can anybody tell me sequence from where we start and where we end? Journal, ledger, trial balance, subsidiary books, balance sheet. Yes, Lasita, Gaurav.
So primary entry or transaction it has journal book, then it is entered into the ledger.
Yeah, go ahead, Lasita.
From ledger, the profit was account, and from balance and finally. Okay.
Your voice is not clear. Maybe there is some internet connection. Okay. It's easy. Like first we make a journal entry, then we shift journal entry into a ledger, then from ledger to trial balance, then trial balance subsidiary accounts, and finally we make a balance sheet. Okay. Ultimately, which is used by management. Okay. So here today we are going to discuss about the last part. How management use this balance sheet or how management use these accounts. Okay. So this is what we call accounting management. But before we go for accounting management, we have just one nice last slide to cover from unit 3. Types of asset classification. There are majorly three kinds of assets: convertibility assets, physical existence, and usage. Based on three criteria, you can divide your assets. Convertibility, current asset and fixed asset. Current assets have easy convertibility, like cash in hand, okay, raw material, gold. So this kind of assets are easily converted. Fixed assets are land, equipment, factory. They take time convert them into asset or into a liquidity. Physical existence, tangible and intangible assets. What is tangible and intangible assets? Like we have discussed many times. That's why I'm asking. What is tangible and intangible assets?
One example of intangible asset is goodwill,
Okay, very good. Okay, something
and
which you cannot.
others
Yes, sorry.
others are tangible assets like land and building, plant and machinery, etc. If
Okay.
you ask in terms of Schedule 3 and Schedule 6, and Schedule 3 definition is somewhat different from that.
Okay. Okay. So tangible assets are those assets which you can which will look similar when you use your five senses. For everybody, it is similar. Intangible assets are something which you cannot see, which you cannot touch, but they are there. Like Sir has mentioned about the goodwill. The goodwill is something which you cannot touch, which you cannot see. But yes, that has a lot of impact. Like if you can see, recently Baiju and Academy has acquired so many small firms which are into online education. Okay, maybe they don't have any physical assets because see, anyhow it's online education. They are conducting their online education of their company from single maybe one PHP flat. So there is not a much value associated with that particular company in terms of tangible assets. But if you look in terms of intangible assets, they are having a huge customer base. They are having a numbers. Okay, they are having a reach. They have a trust. So this is again converted into assets. This is their asset, and unacademic or by you are buying their assets. Obviously, there is a reason that they want to go away with the competition or they want to acquire the competition itself. But their goodwill has bought them a huge money. Okay, so there is another kind of asset that is tangible and intangible assets. So tangible assets are those assets which you can touch and you can see through your five senses. Whereas intangible assets are something psychological which you cannot see, which you cannot touch, but they are there, like a goodwill. Usage, operating leverage, non-operating leverage. Sorry, operating assets, non-operating assets. Operating assets are which those assets which you use in day-to-day life to ensure ease of doing business. Okay. Whereas non-operating assets are those assets which you may not use in day-to-day basis, but they are part of your balance sheet.
Sir, I have a question. Like you have described the convertibility assets, and fixed assets and current assets. So, can you
Yes.
please let me know, like, fictitious is a part of current assets or fixed assets?
See what is fictitious asset? First, like there are many people who are not from a commerce background. So let's understand what is fictitious assets first. What is yeah,
Okay.
like go ahead. What is fictitious assets?
Yeah, fictitious assets is actually we are calling fictitious assets and assets, but in reality it is not a kind of assets, it's a kind of expense, but we are considering this kind of expenses as as in fictitious assets. But like the kind of expenses we are doing in the, like in a like for example we are doing any kind of advertisement, okay, and we are paying let's suppose 1 CR for those advertisement. So we cannot show that expense in our balance sheet. Like if we are showing whole 1 crore in our balance sheet, so maybe it can show a negative balance sheet, okay, because it shows that our balance sheet is running in a loss. So that is why what we are doing is we are just taking a margin of that expense, okay, and we are showing a like 1.5, or maybe uh, the amount from which we can has the position, like we can show the balance sheet is going on a profit. So we are adjusting all the expense in a long run, like in a current financial year. Let's suppose we have taken 10 lakh
One
rupees.
great and simple example of fictitious asset is preliminary expenses. Because preliminary expenses, when a business is set up, some expenses are to be incurred, and that is to be written off over a period of years because profiting is not started. So preliminary expenses is a good example of fictitious asset.
Exactly. And can you see those expenses? Or can you see those assets?
Yes,
Can
those
you feel
expenses
those
can be
assets?
split over the years because in the initial year of starting a business, profit cannot be made. So over the years, when the profit is made, it is to be written off over a period of 3, 4, or 5 years as per norm. So it can be called a fictitious asset in the initial years, and after that, it is written off by year.
Exactly, sir. Like you have explained. Uh, but like Vivek's question was that whether it is tangible or intangible. So obviously these expenses, like you have made expenses are advertisements, say, or whatever, like you have expenses incurred in the initial period. So they are non-tangible. You cannot see or you cannot touch those expenses. Okay. So there it is asset, though that is bringing value for your company, though it is bringing customers to your business, but they are non-tangible assets. Okay. Unlike land, machine, equipment.
Oh, so my question is, the fictitious assets are the part of the current assets or of fixed assets? Because we cannot say it is an fixed assets, and in current assets we know very well that current assets are the assets we are easily convertible within the given accounting period. So we are taking the fictitious assets in a long run, like for we are adjusting the amount in 3 to 4 years. So is it
Okay.
good, like we are taking as in current asset or fixed assets, like which is both we can like in which sector we can say like fictitious are parts of current or fixed?
See, can you convert your assets into a liquidity? That defines convertibility. So whatever fictitious expenses you are saying, that needs to understand whether they can be converted immediately into a liquidity, or where that needs a time to convert into liquidity. Like you have mentioned about advertisement expense. Okay, advertisement expense cannot be converted easily into a liquidity. Okay, this is something you have spent for a long period of time, and that will take a long time to recover that cost of the or approve benefits from those assets. So
Mhm.
fictitious assets. First, you have to define, like, understand which fictitious assets are you talking. Can you convert that fictitious assets immediately into liquidity or not? And normally fictitious assets are those assets which why we turn off, because we, over a period of time, we convert, or we try to make a benefit from those assets. Fictitious assets is not only about advertisement. There can be a various fictitious assets. So based on whether they can be converted within a year, like current asset and fixed asset, if you can able to convert assets into liquidity within a year, you can call them as a current asset. If it takes more than that, then you can call it as a fixed asset. So based on that, you have to decide whether it is a like particular expense which you are writing as a fictitious asset. So that is whether it's a current asset or like fixed asset.
Got
Right,
it, got
Vivek?
it. Thank you.
Okay. Okay, till third unit we have discussed about accounting management, various principles about accounting management. Now we are going to understand what is the utility of those accounting management. Okay, and now the topic of the fourth unit called a management account. So management accounting, like you have balance sheet, okay, you have subsidiary accounts, you have so many things. But ultimately, those who are going to make a decision when looking at your accounting management, maybe they are not people who are coming from a financial background. Maybe they are, but may not be there from accounting background, and they may not have the knowledge which those people who are making accounts are having. So there are various key terms, like many of us are not from a commerce background, but going to enter into a management role. Like as we get experience, maybe we reach up to top management, but still maybe we not having a technical knowledge about accounting. But still, you have to use accounting statements, accounting numbers to make various decisions. So this is what we call management accounting. Like how you use management accounting as a tool to make various decisions or to ensure efficiency in a business. So management accounting is a tool to assist management in achieving better planning and control over the organization. So there are various institutions which prepares management for this thing. But overall, just to understand, suppose somebody is from a financial background and he is presenting management accounts or accounting statements in such a way which will help management to take a better decision, to increase efficiency in their decision. This is about management account. Okay. Aims and objective, taking important decision as we had discussed. Management accounting helps you to take a better decision because your numbers are in front of you. You know what is your profit and loss of last year. You know what is your trading account. You know what are your various subsidiary accounts. You can see your trial balance. You can see how much cash you earn and or how much cash you require. You know what is working process. You know your liquidity status. So based on different statements, you will be able to take a decision. Like suppose you have enough saving with you or enough cash available with you, and you are planning to expand your business. So you can take a decision. Anyhow, this capital is lying, and even if I invest somewhere like in a bank or somewhere, so maybe I'm going to get 7 or 8% of interest rate. But at the same time, if I invest or if I expand my business, maybe I'm going to get. But there is a probability, high probability that I'm going to get a better benefit. So what obviously as a management, what decision you will take? You will take a decision. Maybe your accountant or somebody who's expert in finance will say like this much of amount you have and this much amount you can use for this much of it. So as a management, you can decide where to invest that money to get a better benefit. So management accounting has a utility for making a various decisions, important decisions. Planning for future business activities, like we have seen a case study of Haldiram, okay, while discussing use of working capital management. Okay, so during that case, we have discussed you can make a planning about the future. Maybe there are various methods you can use, like using your past curve experience, or looking at the trend analysis, or forecasting. By using the various techniques, you can plan about your future. So based on your availability, your resources, and your future expectation, you can take decision. And because information, the most important utility or most important thing which you require to make a decision is information. And information is provided by management accounting or this accounting rules. We have discussed the utility of management accounting, that is provides information that is required to make a decision. Even if you see decision making structure, okay, or the steps which are involved in decision making, obviously the most important stage where you plan about alternative, you cross check every alternative and you get information about every alternative and finally you select the best one. So how you select the best one? Based on that information. Okay, you convert that information to knowledge. I guess we have discussed the difference between data, information, and knowledge, right? What is difference between data, information, and knowledge? Anybody? It's like something which we use on a daily basis. Data, information, knowledge. These are
So,
very complex.
yes,
Yes,
sir.
right.
So, data is a bulk, and from that we filter out according to what we need, and that become the information. And whatever we implement in our task, that is knowledge.
Yes. Okay. So obviously, what management accounting that statements are providing is the most required information, and management converts that information to knowledge for taking their decisions. Okay. So this is one of the objective and important objective of management accounting. Evaluating and monitoring performance. Obviously, whenever you have a trial balance, like when you make a trial balance, what is the frequency of making a trial balance? Okay. Whenever you want to see your situation or whenever you want to see your business status, you make a trial balance. It is not something which you make on every day or every week. Maybe it's a month, maybe quarter. Whenever you think that you want to know what is our status of the business, you can go for a trial balance. Okay. So trial balances, you just pick up the final line or the bottom line or bottom numbers from every statement, and you try to see whether what is the status of your organization, whether we are going in the desired direction or not. Okay, so obviously management, whenever they think like whatever resources they are implementing, okay, like if I have to tell you example of Sensodyne launch, when we are launching Sensodyne, if you were there on our television during 2012-13, you must have seen like every spot, like we have calculated every spot, every top advertiser, top serial or top over on that particular period. We have captured that for Sensodyne. Okay, and ultimately, Sensodyne was second highest product rate, second highest in sense, which have achieved the best input-output ratio in terms of expenditure and in terms of farming after real use, after Dabur. Okay, so we have reached that, but to look at evaluating and monitoring performance, you have to understand how much money we have spent on that particular advertisement, how much money we have given for the team which was working separately for Sensodyne. We have ethical team and we have pharmaceutical team. We also had FMCG team. So completing that expenditure, if you look at the 100 crore which we have achieved in 1 year, maybe that was one of the best achievements. But in terms of income and output ratio, that was something where company was in loss. But the best part is that within 1 year we have reached to large number of customers. After that, we were sure we were not required to do any advertisement because people were already aware about the utility of Sensodyne. Okay, and we have reached or we have convinced our masses initially that after continuously maybe we have never achieved 100%. Okay, but we have achieved whatever number we have achieved at a lesser cost compared to what we have spent in the first year. So how come you come to know that what is your input output ratio based on your statements? Like in cost accounting, we have cost on advertisement, cost on wages, cost of production. So whatever cost you are incurring, you have one statement that is subsidiary account you will get from costing account, and sales account you will get your ultimately how much sales you have achieved, and from bottom line you will understand or you can merge all three statements to understand what is the bottom line or what is our ultimate profit. Okay, this like organization is the top management is not interested in domain, but where they are interested in what is the ultimate conclusion we can use by by having these three statements in front of us: profit and loss account, costing account, purchase account, or sales account. Okay, so this is one of the case study to understand what was the utility of management accounting or accounting principles for the management. Okay, assisted decision making we have discussed. Proper utilization of resources. Okay, as you said, what are the resources we have? Like some of the assets are ideal. Like we have discussed, if we have ideal cash in hand. Okay, this is not that's not required for the next couple of time. So what you can do, you can invest in a share market, you can invest in a like you can go for a bank, saving in a banking, or you can expand your business. Or wherever you are required, you think that you require the resources or you require a cash in future, and you don't have. Simon, at the same time, you can convey that same thing to financial manager, and they will arrange funds for that required period. So based on this thing, many things can be decided. Like you want to go for a heavy advertisement, and you think that you have some of the resources which are required to go for a heavy advertisement, or you are shifting from digital marketing to YouTube to maybe television market or print media. So obviously that requires a fund, and if you see that you have a fund and somewhere you are making a better profit from that particular product, you can see this from statements. Obviously you can go for some more expenditure. There is something called a product life cycle. What is product life cycle? I hope you have studied in some other subject. Product life cycle. Any idea what is product life cycle? Okay, what are the stages for which
Sir, product life cycle means, as the term says, it's from the starting of manufacturing of the product till the dispatch of the product.
no, it's not about uh, production. It is about the various stages through which product moves after it is manufactured. Okay, maybe initial stage, so growth stage. Okay, initial stage, introduction stage, then growth stage, then stagnation, then decline. Okay, in various stages, you have to have a different advertisement planning, different promotional activities, different USP, different messages. Okay, so that you can enlarge or you can sustain that product into a growth state, like introduction stage. As early as possible, you want to enter into a growth strategy. The moment you get into a growth, you want to enlarge your growth. You don't want to go into stagnancy. But the moment you get into stagnancy, at least you don't want to go into decline stage. Okay, and once you get into decline stage, what you want to clear a maximum benefits, or you want to get a maximum benefits from decline stage. So that either you can reintroduce the product, or if you are not interested in reintroducing the product, you don't want to spend anything on that. So these are the decisions obviously you can make about a particular product based on the revenue, the losses or the profit which you are making from that particular product. So these are the things how you come to know about these things. Obviously, you will come to know about these things from your financial statements, from your accounting statements. So again, this is the utility of accounting statements from a marketing perspective or from various departments. Okay, you are using like the 3 units we have discussed about how to make different statements or what are the different statements, what is accounting. But now in the 4th unit we are trying to understand how these statements or how these various accounting tools you can use to make a better decision. Right? I hope you can imagine like why we are studying accounting. When we are saying we are ready for a business management course, why we have to study accounting? Even though you are not going for accounting management as a principal, suppose, but still you are studying accounting management. Why? Because irrespective of whichever department you work, you have to utilize accounting principles or accounting statements for a better decision making. Right? Obviously, accounting management is nothing but just a source of information. You are getting information from accounting management, and that is helping you to make a decision. That is the utility of accounting management. Asset safeguarding. Okay, obviously, ultimate aim, ultimate like we have discussed about 3 objectives or 3 functions of financial management, and one of them was maximization of wealth of stakeholders. Okay, and what is the wealth? Assets. So obviously, by using accounting management or by using accounting statements or accounting as a tool, what managers are trying to do, they are trying to maximize the wealth and obviously to safeguard the wealth of stakeholders. Okay, analysis, variance analysis. What is variance? Variance. What is variance? Okay, variance is nothing but difference between what is reality and what you have planned. Okay, that is a variance, a difference. Okay, even in a normal term, like day before yesterday, I was listening to one of the management. He was saying, what is the stress? So he was defining variance and stress are actually similar. Everybody in their life, like, it is something apart from our subject, but I found it very interesting and useful. That's why I'm sharing. He said, no, actually, variance is a stress. There is something which we have in a reality, maybe our job or like whatever we have, maybe our economic status or friend circle, whatever we have. This is something which we have as a reality. But always society expects something from us, and we always raise our expectation bar. Okay, maybe our salary is 50,000, but we expect 1 lakh rupees, for example. So that 50,000 rupees gap, or maybe I'm having 50,000 salary and I'm expecting 70,000 rupees. But that 20,000 rupees is not just a variance, but that is actually a stress, a reason for a stress. So there can be a two-way you can reduce your variance and you can reduce your stress. Either you can raise your salary to 70,000. Most of the time it is not possible. That's why we are on 50,000. Or you can reduce your expectation itself. Okay. If your expectation and your reality matches, there is a chances that you will have a less stress. But today, most of the youth, like those who are entering into market, most of the time they have unrealistic expectations that ultimately lead to stress and depression. So this is something I like, where we can use a management principle of accounting word, accounting term variance to understand what is the stress, depression, why most of the youth are unsatisfied from their life, from their job, from their family partners, or whatever. But this is the core reason is variance or stress. Okay, variance analysis is the comparison of standard budgets and the actual output, which assist management in moving the deviation. Okay, so you have planned something from a particular activity, and you may have got a different output. So whatever that difference is variance, and you can analyze variance based on your accounting statement. Okay, maybe you have like we have discussed about the Sensodyne case. Maybe you have invested in say a crore of rupees on advertisement, and you are expected this much sale, but maybe sale is little bit here and there as per your expectation. Okay? So what you can do, at least you know the variance, you know where is exactly a problem lies. Once you know the problem, being analyzing or applying your knowledge from information which you get from accounting statements, you can actually change the trend, or you can bring the results as per your expectations. Okay, we can bring back them on a track. So this is what we call the variance. Variance analysis assists managers in finding out the level of output at which cost and revenue are equal. Okay, so obviously the intention behind expenditure on Sensodyne was to have a better revenue. If you are not getting revenue, obviously either you can change your source of expenditure, also you can bring a new investment, or whatever decision you have to take, you can take that decisions to ensure whatever costs I'm incurring on this product, definitely at least I will be able to recover that through a revenue. Okay, the ultimate aim is to increase the revenue, and you will come to know how much revenue I'm getting and how much cost I'm putting on particular activity. If they both are not matching, obviously there is some variance, and once you know the variance, you can take a decision or you can take action to bring the revenue on a track. Okay, functions of management accounting: provides data, obviously it provides data and ultimately you convert that data into information and knowledge. Modifies data: there is like there is a various way you can see a single entry. When you are mentioning in a journal, obviously you have an explanation, but from a journal it is going into a separate book, subsidiary books. When you look the same entry in trial balance, there is a different purpose. When you look that into a balance sheet, there is a different purpose. So every entry, the same action may have a different meaning for different people. Okay, and based on that data, based on that information, you have all the freedom to present that data into particular way, which will help management to take a decision, or that will be easy to interpret. So ultimately, when we are having a like bulk of books, which we call the journal, ultimately we have a single page or maybe a small statement called balance sheet. So ultimately, what we are trying to give that statement, which will be easy to understand for stakeholders, maybe investor, employees, okay, or those research students who are analyzing your company's growth. Okay, so you have a freedom to present a data in a way which is easy to understand, easy to comprehend, and it is user friendly based on the requirement of user. Communication: obviously accounting management, accounting statements are communication between organization and investor, organization and the board of directors, organization and employee, organization and common citizen, organization and government, organization and bureaucracy like for tax compliance. So this is like financial accounting or accounting management is actually a communication between a different stakeholders. Okay, they will pass your message where you are standing, how much is your growth, whether this particular organization is a good option to investment or not, whether you want to go for equity in that particular organization or not. So again, financial statements or financial accounting or management accounting are tool for communication. Analysis and interprets data. We have already discussed this, how we analyze, how we interpret, and how we help this data into for our decision making. Serves as a means of communicating. We have discussed. Facilitates control. Like since we always find a variance, and whenever we find a variance, what we do? We apply our controlling tool to bring the path or bring the situation under control. So there we use a controlling method. Like either you increase your input, you decrease your input, or divert your input, or some or other way you apply your controlling tools. Okay, which we have studied in our principle of management. You apply your controlling tools to ensure that you bring back the train in a direction where you want to move a particular activity. Okay, this is what we mean by controlling tool. Use also qualitative information. It is not only about numbers. Okay, it is not only about, there is a difference between qualitative and quantitative tools. So quantitative tools are statistical methods or they use numbers to understand the difference between qualitative and quantitative. Let's use the example of RBI. RBI controls a monetary policy, and when they control a monetary policy, they have two tools: qualitative and quantitative tools. So quantitative tools can be, suppose tomorrow RBI decreases interest rate. Okay, on reverse repo rate uh, they increase the interest rate. So what will happen the moment RBI decreases interest rate? Repo rate, if RBI decreases interest rate or they decrease repo rate, so what will happen in the market? In economics, you must have heard about repo rate. Repo rate is interest rate on which RBI gives loan to banks. So if RBI reduces interest rate, so what will happen? Banks will take more loans, right? If banks will
Okay.
take more loans, we are losing. Vivek, you want to say something?
No, so I'm good. I'm good.
So when RBI reduces interest rate, obviously banks will take more loan. If banks will take more loan, then obviously they will give to the citizen or the business community at a lower interest rate. People will take more loan, they will buy car, they will invest in businesses, they will generate jobs, and ultimately there will be more people who will get employment, better wages, and ultimately business activity increase. So this is the qualitative views to which RBI or the monetary policy which RBI uses to ensure there will be better economic conditions. So this is about the numbers, like either increasing or decreasing. It can be in a vice versa. Like if there is a high inflation, RBI can increase their interest rate, okay, so that people will deposit money in bank and banks can deposit money into RBI, so that there will be lesser liquidity in market. This is increasing or decreasing of interest rate is a quantitative tool, whereas qualitative tool, like government is promoting or giving emotional support to business community. Okay, they are showing various programs through which they are promoting uh, that Indian economy is growing or it is beneficial to invest in government economy, Indian economy. So they are not playing with any numbers. They are not using any statistical data, but they are emotionally convincing people to invest in India or trying to convince people that emotionally to invest in Indian business or start your business or expand your business. So this is a qualitative tools. So financial statements are not just a quantitative tools. It is not about the number, but it also gives a confidence. Like recently, take a recent case study of Patanjali. Baba Ramdev has bought Ruchi soya. I hope you have read about this case. Like this is one of the most talked about case study, like talk of the town now. The moment Patanjali got or Baba Ramdev got Ruchi soya, their share prices has increased multiple times. Okay, so what is this? This is a qualitative tool. Like people have trust on Baba Ramdev or Patanjali because Patanjali has changed like whatever the traditional image we had about the FMCG. Like FMCG is something considered as a safe investment place. Like you invest in ₹1 and every year you will get some or other benefits. Normally you're not going to lose. But recently Patanjali has changed the feature. Like within a 7 to 8 years, they have touched more than 20,000 crore. They are not already in the category of top FMCG companies. Okay, they have already reached into a top FMCG companies. And the moment like Ruchi Soya was actually making a loss. Okay, it is already in a debt of 12,000 crores. But still, I don't know why, but Baba Ramdev has thought of buying this particular organization. And the moment he bought the organization has changed their strategy. Like apart from what happened in the stock market, but on ground reality also, they have completely changed their manpower. Okay, now they are hiring. They are ready to hire a management team or the employees from the best of the best companies. They are paying very high salary, and one of them already, which is was having a very innovative and new products like Nutrigen. All we have, you must be aware about their products. But now, through a qualitative communication, Baba Ramdev or Patanjali have convinced people that now Ruchis were going to perform very well. And so people have trust on them. And the prices or investment what Ruchis is getting now, it's a huge now. So again, accounting statements or management accounting is not only about a quantitative tools, but it is also a qualitative tool of information. With assets planning, like obviously, since it is providing information, it will give you support to make planning for future. Assist in organization, like it is organizing in the sense you come to know what your priorities. Since you come to know your priorities, you are aware about your priorities, you allocate your resources based on the priorities. So accounting statements help you to prioritize your work and to organize your work. Okay. Ensuring that there should be a linkage with the different activities which are interlinked. You should be able to decide your resources based on your clarity. Decision making, like management, before making various decisions, obviously they go for accounting management or they go for management accounting. It to assist in motivation, like we have said, when organization or the employees, say most of the time employees get shares. The employees are I forgot that term, but most of the time employees are giving shares at a comparatively lower prices. Okay, employee share, there is something provision through which normally employees, the company employees will get shares at a comparatively lower price. Okay, so there is a two reason for giving shares to employees. One, they will feel the ownership among like ownership in a company, and second thing, they will get motivation. Imagine if they are continuously watching or they are continuously reading the accounting statements or balance sheet of organization, and they see that our organization is performing well, our share prices are going well. So that will not only give the economic boost or there will not give economic benefit, that will also give the trust in organization. And there will be lesser attrition rate in organization because employees are more motivated. Employees can see their balance sheet, see their accounting statement, which is performing well. This is about employee, but it can also have a motivation in terms of stock market. We have seen like once upon a time during 2008 recession. Normally, most of the blue chip companies are going into loss. Most of the blue chip companies, okay, but there were few companies like Reliance. Reliance, they need that they are making loss. Their stakeholders, their shareholders are making loss. So just to compensate their loss, they have announced dividend. All of a sudden, they have announced a dividend, and they have given a free shares to their shareholders, just to ensure they will not. Uh, okay, they can stop the loss which their shareholders are making. So this assists in motivation. This gives motivation. Accounting statements give motivation not only to employees but all the stakeholders. To coordinate, obviously, various departments based on accounting statements can coordinate with each other and to control. Whenever they see the things are not moving as per the plan, they can apply controlling tools and can ensure that uh, things are happening as per their expectations. Okay. Scope of management accounting, financial accounting. Okay, there are various accounting tools which you use. Okay, and these tools help management to make a decision. Like in terms of taxation, there can be various tax. There is tax evasion and tax avoidance. Okay, tax evasion, tax avoidance, something seems similar, but they have a different meaning. Tax avoidance, there is a negative term, it's illegal. But if you have a loopholes, tax evasion, if you know loopholes and if you can use those loopholes to save taxes, that is something which is considered as legal. Maybe that is not illegal. You should pay your taxes or due taxes, but obviously companies are there to make a profit. So here, by using a different accounting tools, they can ensure saving of taxes. Okay, from an employee perspective, I can tell you example. Like I think we have discussed, but say suppose there is a company which is paying salary. Okay, so there are various options through which they can pay the same salary. Okay, there is some company which is paying high basic. Okay, there is one concept that is basic salary. If you are employed, you must be knowing what is basic salary. So something called basic salary. If your basic salary is high, then obviously you have to pay higher taxes. Okay, because you pay your taxes on basic salary. Okay, but if I give you lower basic salary, but if I increase your say convenience component. Okay, convenience component is considered as your expense. Like if I'm giving you traveling convenience, house convenience, or live convenience, whatever. In terms of convenience, if I'm providing you salary, that is already considered as your expenditure, and you have to pay lesser expenses lesser taxes. Okay, so by using a different mathematical tools or different tax evasion tools, by using the loopholes, you can save a taxes, and this is possible. This is possible by using a tax evasion policies or by using your accounting statements. Okay, you can manipulate your accounting statements in a positive way. I'm not saying in an illegal way, in a legal way, but you can save a taxes. That is another scope of management accounting. Okay. Reporting to management, obviously, suppose tomorrow management want to take a decision, particular thing like whether they want to expand it. Say, suppose it's a North India based company and they want to expand their business in South, so they can see what happened with their other products, what is happening with their competitors. They can read about the statements related with that particular product or that particular activity, and based on that accounting statements of principles, they can take decision about whether to expand in the south or not or not. Even if you want to expand, which way we have to expand as in the south or any other activity. This is just an example. So again, it helps. It's reports various statements to management, and based on that, ultimately it's about the profit. So company management can take decision whether this particular decision is in support of company's profit or not. Right. So reporting to management of management accounting statements will help. Cost accounting, it is about the cost. You come to know whatever cost you are incurring on particular activity, whether it's advertisement, manufacturing a product, marketing, whatever sales, whatever expenditure you have. Okay, that ultimately calculates, that ultimately helps to reduce your cost. For example, if I have to discuss about the costing account example, after demonetization, like everybody knows, 99% of the currency deposited to RBI. Okay, 99.99%. Most of the currency is already deposited to RBI. Most of the people have appreciated this particular proposal that okay, we have to even B.R. Ambedkar said that every 10 years we have to change our currency, or we have to renovate our currency. Okay, so that we can curb corruption, or we can curb the black money. But ultimately, if you go for a cost accounting, or if you read a cost accounting statement which is released by RBI, you will say to recover that money, what amount RBI has spent. Okay, many like for many days banks were not working. Even if banks were working, they were working with a limited capacity because they were busy in collecting those money or depositing those money. What expenditure RBI has incurred to print new currency. Okay, if you go into all this cost accounting thing, or whatever cost RBI has incurred to 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 deliver or to pass through this demonetization episode, you will realize user or RBI was in a big loss. Okay, the expenditure we have incurred on this demonetization episode is was huge compared to what advantages we have from this demonetization. So this is a benefit of cost accounting, and management will look at this thing. Or next time, whenever they have to go for demonetization, obviously they will consider these things. So these are the hindrances, or these are the costing which we have to incur before we actually go into any activity. So this is again a helpful activity, or this is again a helpful importance of scope of management account. Okay, inventory control, obviously based on whatever stock you have, whatever purchase you have made, what is work in process, like how much was the stock you have carried forwarded from last year. So based on various things, you can assure that how much inventory you have, how much orders you have in front of you, and based on that you can control inventory. Obviously, controlling inventory is controlling your cost, or controlling your investment, or putting your investment into right track. There is no point into increasing inventory just because you have excess money. Okay, you should manage, or you should apply some of the techniques like just-in-time technique or other just-in-time. We will read it just-in-time in operation management. But just for the sake of understanding, just-in-time means you are ordering order when you require it. So you are not having any surplus inventory. Why? Because again, this will engulf a cost. That will engulf a place, and there is a chances of loss. Okay. Or there can be anything if you have surplus inventory, maybe that can lead to loss in any way. So to avoid those things, what you need to read a management account. Okay, this is what we have studied about the scope. The next class will start about integrated financial planning and ratio analysis. Just we have one to find from unit 4, and we'll start unit 5. Thank you.
Thank you, sir. Thank you.
Thank you, sir.
Thank you.